The AI story continues to fuel this ferocious rally. Do you remember what happened just 6 months ago? Do you recall that day? It was April 2nd, 2025. President Trump stood at the White House rolling out new tariff packages for a number of different countries, showing the new tariff and what they were charging us through some sideways math. The markets got spooked, and as you could see from this chart, we were sitting down nearly 15% in early April. However, since that day, the markets have surged more than 20% to where things stand today. Again, the market continues to be resilient, to say the least. And although there's plenty of near-term concerns, that doesn't take away from my long-term goals. And in today's video, I'm going to be going through 4 of my favorite stocks I am buying right now. Not just buying right now, there's still 4 of my favorite stocks, period. I'll be showing you stocks that I'm buying outright, but also stocks where I'm utilizing an options strategy. So before we dive in, do me a huge favor. Show your appreciation just by simply clicking that like button down below. Really helps with the algorithm, and also consider subscribing so you can be notified anytime we drop new content, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And when it comes to investing, it's so important for you to have a process, a checklist of items from a valuation perspective, from a quality perspective that you go through, merge together fundamentals and technicals. Back in the day, there was a half dozen different resources that I would subscribe to in order to go through all of my checklist of metrics and things that I want to look at before investing in a stock. That was before I came across Fiscal AI, and it is now the most powerful research tool for any investor, new or old, to utilize and have in their toolbox. Whether you want to see financial information like a company's revenue growth or how efficient they are ran by checking out the company's operating margins, or looking at non-financial data like the number of subscribers if you were analyzing that of Spotify. And you can also dive into a number of different valuation metrics and price targets from analysts. Fiscal AI is one of the most powerful tools out there, whether you're a professional investor or just a retail investor like myself. And right now you can get 15% off any of their paid subscriptions by utilizing my link down in the description below. I want to say a big thank you to Fiscal AI for sponsoring this video. And prior to the 15% off, they're also going to give you a free trial. So definitely head down and try out Fiscal AI today. All right, let's jump back into our video, taking a look at 4 of my favorite stocks I'm buying right now, beginning with stock number 1, which is going to be Meta Platforms, stock ticker META. And when it comes to these mega cap companies, Meta Platforms has kind of been losing some ground. And right now at today's valuation, I believe this is a gift. After all, when it comes to Meta Platforms, they are one of the largest digital advertisers in the world today, trailing only the likes of Alphabet. And what are we entering right now? The 4th quarter, the biggest digital advertising quarter of the entire year. When it comes to Meta, they currently have a market cap of $1.8 trillion, making them one of the largest companies in the world. Over the past 12 months, shares are up 22%, and year to date, up 19%. In mid-August, the stock hit a new record of $796 per share. Since then, though, shares are down 10% from its intraday high just 2 months ago. Meanwhile, the S&P 500 is up 4.5% during that time span. Why the interest in Meta for me? Strong advertiser going into its biggest season of the year, a great management team continuing to see fantastic growth. They have a number of different products, and it's trading at a great valuation. But again, this is a high price stock. So this is going to be one of those examples where this is a stock that I'm buying outright and not utilizing an option strategy on. Taking a look here at the chart, we can see that the RSI for Meta is rather low. The MACD at the bottom appears to be turning as well, adding to my argument of why this stock is a buy from a technical perspective. Now let's take a quick peek at the company's financials utilizing Fiscal AI. And in this chart here, we can see the company's revenues, operating margins, and operating profits over the past decade. What do we see? Record revenues at $178.8 billion, record operating profits at $78.7 billion, and strong operating margins at 44%. From a free cash flow perspective, it continues to be quite impressive because this is after what they are spending on CapEx, which you could see as the blue negative bars. The past 12 months, the company has spent over $50 billion and they still generated $50 billion in free cash flow after paying those CapEx charges. Turning now to valuation, where you can see from this Fiscal AI chart, the stock trades at a forward PE multiple of 25.1 times. But if we incorporate the 2026 estimates, which I like to do post June 30th, this stock trades at just 23.7 times, which is in line with their 5-year average. But as the company continues to grow and be more efficient, that's a multiple that I think needs to rise. So again, when it comes to Meta, this is a stock that I am buying outright. And for those of you that are already Edge Plus subscribers to my newsletter, you got a trade alert notifying you that this was a recent purchase of mine. And if you're not yet an Edge Plus subscriber, become one today. You get access to my entire portfolio. You get trade alerts in real time when you're part of our Discord community. You get stock deep dives and access to our monthly members only meetings. Check out the link down in the description below. And that's going to bring us to stock number 2, which is going to be SoFi Technologies, stock ticker SOFI. And when it comes to SoFi, this is a high growth stock, the biggest growth stock of all 4 that we're looking at here today. And it has had a phenomenal year 2025 and a phenomenal past 12 months as well. And on top of that, if you watched my video at the beginning of the year when I talked about 6 of my favorite high growth stocks for 2026, which stock was on it? It was SoFi Technologies. On the year, shares of SoFi are up nearly 90%, which is quite impressive. They currently have a market cap of over $30 billion, and over the past 12 months, shares are up over 220%. It is so important for those of you, especially those of you that are new investors, to not get so caught up in what a stock's past performance was, because past performance isn't necessarily indicative of future results, and you don't know the number of clients that I have talked to that have traded out of their SoFi Technologies far too early. They were up 50% over the past 6 months, but they traded out of the stock. And since then, as we just saw, shares are up 223% over the past 12 months. They missed out on massive gains. Let valuation and quality and some technicals guide your path forward. It's important to do your homework and see if the stock at the current price makes sense. And again, for that, I utilize Fiscal AI. Looking at the chart here, you can see the company's revenues from both net interest income as well as non-interest income. Both continue to explode, with total revenues surpassing $3 billion for the first time. And as you can see from this chart, analysts are expecting the company to generate EPS of 55 cents next year, with an average EPS growth rate of 55% over the next 2 years. This equates to a forward PE multiple of 47.9 times, giving the stock a PEG ratio of less than 1, making it extremely enticing even after this enormous run. But when it comes to SoFi, again, you can take the approach of buying the stock right here, but it has had a nice run. And I would like to buy it just say 15% lower if we do get some volatility here over the course of the next month or so. So for me, I'm going to take the approach from an options strategy, looking to generate income with the hopes of buying a stock that I want to buy at a price that I want to buy it at. So what level do I like? I like the $23 level for SoFi, and by selling the $23 put with an expiration date of November 21st, I could collect $1.25, which equates to $125 per contract. So with 5 contracts, I would generate $625 in income on this trade immediately, and also potentially get the chance to buy shares of SoFi at a price I like, even if it falls. If the price doesn't fall, we continue to do the same thing, rinse and repeat, and continue to generate income. And that's going to bring us to stock number 3, which is going to be Uber Technologies, stock ticker Uber. And as we have seen from these past 2 stocks that we've looked at, both of them have the word technologies in them. But in fact, neither of them operate in the technology sector. SoFi is obviously a financial company, and Uber is actually technically an industrial company. If you look at the top holdings for XLI, which is the Industrial Select Sector Spider ETF, what do you see as the 4th largest holding? You see Uber. And if you look at the Vanguard Industrial Sector ETF, again, a top holding is Uber. But if you go to one of the most popular technology sector ETFs, XLK, what you won't find is shares of Uber. The company currently has a market cap of $201 billion. Over the past 12 months, shares are up 34%, and year to date, up nearly 60%. Again, Uber continues to be one of my favorite stocks to own. And if you're part of my Discord community, you know that I was pounding the table when Uber shares were trading in the low $70 range and even briefly crossed under the $70 range. Why? Because of the overblown news around robotaxis. Now, it's not because I don't think robotaxis is the technology there. I do think it is because I've ridden in it and I've seen it firsthand. But I think there's room for more than a few names. And Uber is already partnering with some robotaxi companies by way of Waymo. But when it comes to Uber and their direct competition, that's Lyft, and they dominate the competition. Here's a look at some of that non-financial info I discussed when it comes to Fiscal AI. We could see gross bookings for Uber over the years. And to see how much they dominate its closest peer in Lyft, check out this chart showing gross bookings by company. The other thing I love right now when it comes to Uber is the fact that they have turned positive in free cash flow. And when that happens, it tends to snowball for a business. And it has been growing to more than $8.5 billion over the past 12 months, which is up from $6.9 billion in all of 2024. Analysts are looking for the company to generate 2026 EPS of $3.54, which equates to a forward PE multiple of 27.2 times. And analysts expect EPS growth over the next 2 years of around 23% on average, giving the stock a PEG ratio of 1.2, which is very solid for a company of this nature. Now, in terms of my personal portfolio, again, I already own shares of Uber, but I would love to add more. So the approach I'm taking here isn't buying outright at current levels, it's hoping for a dip. So I'm going to utilize an option strategy. We're going to sell a cash secured put to generate some income. And I like the $85 level and would love to buy more of Uber if it fell that low. By selling the $85 put with an expiration of around November 21st, I will collect $111 per contract. So with 5 contracts, I would generate $555 in income on this trade and also potentially get a chance to buy shares of Uber at a price I like if they fall. Or if you want to be more aggressive, you can check out the $90 put, which would warrant over $1,000 in income on those same 5 contracts. And again, if you like the idea of options and learning options and seeing my trades, then become an Options Edge Plus subscriber to my newsletter. Again, we have Edge Plus subscription, which focuses purely on stocks, and we have the Options Edge Plus, which focuses purely on options. You get trade alerts anytime I enter a new trade or exit an old trade as well, showing you what was my profit margins, and we also do weekly recaps. So check out the link down in the description below and become a member of the Stock Investor's Edge today. And that leads us to stock number 4 on our list, which should come as no surprise, and that's going to be Amazon, stock ticker AMZN. Again, a well-known company, one that I've talked a lot about, but I think right now, at this valuation, it is way too hard to ignore this fantastic company. When it comes to Amazon, again, one of the largest companies in the S&P 500 and in the world for that matter, they currently have a market cap of $2.3 trillion. Over the past 12 months, shares are up 22%, but get this, year to date, shares are exactly even. Amazon, even on a year like we have seen this year, that is mind-boggling. And again, as an investor, for me personally, I'm not one that's going to chase companies. I'm not one that's going to invest in highly speculative companies. I want to find high-quality assets at great valuations. That's exactly what you're getting right now with shares of Amazon. In fact, when you think about a company that's gone nowhere in a year like 2025, you would think that, well, maybe there's something fundamentally wrong with the business. Is the growth slowing, or are they getting less efficient? None of that is true. In fact, it couldn't be further from the truth. Taking a look here at this Fiscal AI chart, you can see that revenues are at record highs. Operating margin is at record highs, and EBITDA is at record highs as well. The company continues to plow higher and higher and grow while also becoming more efficient. From a technical perspective, the stock is finding some support around the 216 level, so we'll see if that level holds, but at the bottom of the screen you can see the MACD beginning to round out, which can be bullish, and RSI is sitting right around a 40 level. Looking at this Fiscal AI chart, you could see EV to EBITDA, which is one of my favorite metrics to look at for this stock specifically. As we saw a second ago, EBITDA continues to grow and sits at record levels. The company is not yet getting the credit they deserve. And right now, on this metric alone, it's one of the lowest levels you have ever been able to buy shares of Amazon. This is the same thing we saw when Amazon was trading around $170, not getting the credit they deserved. What was I doing? Pounding the table within my Discord community. Here we are again around 220, 215, pounding the table, cheap valuation. Let's see what happens. So when it comes to Amazon, this is one that I think is an outright buy right here. A great spot to layer into, especially if you're underweight this particular company here. It's already one of my largest individual holdings in my portfolio, but if you're not yet have a large position here, layer in at this level. If it falls more, dollar cost average. You could look at option plays, but again, a much higher price stock than that of Uber and definitely much higher than that of SoFi, so the cash requirements are much higher. But a stock price around $200 per share on Amazon, I think would be a steal and a fantastic buy. So that is the area that I personally target when it comes to selling cash secured puts. So there we just looked at 4 of not only my favorite stocks, but 4 stocks I'm buying, either through outright buys or through selling options. Let me know what you think of this video. If you found any value, again, just show your appreciation by simply clicking that like button. It does wonders for the channel and for this video to get a wider audience. And thanks so much for the support, and we'll see you in the next video. Take care.